The SEC under prior leadership, under Gary Gensler, was had a very heavy regulatory hand, and we are expecting Paul Atkins to take a very deregulatory approach, of course, focused on crypto. That's a big area of focus. Also focus on capital formation and a very pro-business approach.
Joining me today is Sonia Barros, partner with Sidley Austin. Sonia, thank you so much for joining us.
Thank you, Matt. Happy to be here.
Now, do you expect that there's going to be some big changes at the SEC under new leadership when Chair Atkins is confirmed and the open commissioner seats are filled?
Yes, definitely, for sure. Paul Atkins, he's no stranger to the SEC. He was previously at the SEC. He was a Republican commissioner, served for 6 years. He was appointed by President George W. Bush. And he's also a securities lawyer, so he has a very deep understanding of the subject matter. The SEC under prior leadership, under Gary Gensler, was had a very heavy regulatory hand, and we are expecting Paul Atkins to take a very deregulatory approach, of course, focused on crypto. That's a big area of focus. Also focus on capital formation and a very pro-business approach. And we are already seeing that at the SEC before he's even started. So the current chair of the SEC, acting chair Mark Ueda, has been there for a number of years, and he's already engaged in a number of initiatives that are relevant to REITs and along the same lines of the focus that we think Paul Atkins is going to take. And I'll just highlight a couple of those for you now. So one of them is the ability to have a confidential review of your registration statement. So previously, this was only available to a company or a REIT that was doing an IPO, an initial registration statement, or if they had been public for less than a year. So now this is available to all public companies and all kinds of registration statements. So it's really a big game changer and will help facilitate capital formation. So if you're filing an S11, an S3, a Form S4, you can take advantage of this accommodation. So for example, if you're not a WIXI and you're a REIT and you want to do an S3, you can file it confidentially, see if you get reviewed by the SEC staff, and then file publicly once you're ready to go to market or closer to going market. So that's really a very big change. Another accommodation that is worth highlighting that the SEC staff recently came out with is a revised compliance and disclosure interpretation. And this one also facilitates capital formation. So this is the ability to go effective on a Form S3 after you file your 10K and before you file your proxy statement. So previously, if you were not a WIXI and you filed your S3 during this interim period between the 10K and the proxy statement, the SEC staff said you cannot go effective on that S3 unless you have what's called Part 3 information, which is usually included in the proxy statement. But now the SEC has said you can go effective. So again, makes it easier for companies to raise capital and do registered offerings. And so, some additional initiatives that we think Paul Atkins may focus on when he gets started, more things in line with capital formation. We may see some increased exemptions from blue sky registrations. So this would be very relevant to REITs, especially non-traded REITs, because when they do registered offerings, they also have to do blue sky clearance. So we may see some additional accommodations there. We may also see a focus on proxy reform. This could be in the form of increased thresholds for shareholder proposals, increased regulation and focus on the proxy advisory firms. So that's like ISS and Glass Lewis. And of course, crypto. The SEC has already formed a crypto task force and is focusing on different initiatives there.
And looking at this particular proxy season, have your clients found it to be any more challenging in light of the changes in the economic and regulatory outlook?
Yes, definitely, especially I would say on the regulatory side. So many folks are aware there have been a lot of executive orders out of the Trump administration, and one particular order was a big focus of companies this proxy season, and that was the executive order to eliminate illegal DEI discriminatory practices. And for the most part, The executive order was focused on the federal government and federal contractors, but part of it also focused on eliminating illegal DEI practices at public companies. And so what that led to this 10K and proxy season is companies really taking a very careful look at all their public disclosures on DEI, what they're saying about their DEI programs. Some companies didn't necessarily change their programs, but they reframed what they say about them. So instead of talking about any diversity targets, they might have taken those statements out and reframed their disclosure in the proxy statement 10K and on their website. So that was really a big area of focus this season.
And lastly, you had talked about cryptocurrency in one of your earlier answers, and that's obviously been a big focus for the SEC, as you mentioned. How is that relevant to REITs and other non-financial firms?
Yeah, so it is relevant. So recently there was another executive order from the Trump administration on the development of a strategic Bitcoin reserve by the federal government and a digital asset stockpile. And what we are seeing at Sidley, we have 1,000 public company clients, and what we're seeing is that some of our clients are thinking about these reserves for their own corporate purposes, like a digital asset reserve, for treasury and strategic purposes, or a Bitcoin reserve for the same purposes, more from like a corporate strategy and capital management perspective. The government's going to do it, so some corporations are looking into it itself. And many of these are non-financial firms. So I don't know that I've seen any REITs do it so far, but I would imagine that this is down the road, that some REITs may think it's important. And so if, as a REIT, you want to do this, you're going to want to make sure you have the right policies and procedures in place to address these Bitcoin and digital assets, right? Some of them could possibly be securities. So you want to think about securities law considerations. You also want to think about governance and other things of that nature.